Hey guys, welcome to another video brought to you by Total Control Traders. Let's take a look at the market, our weekend market video with hottest tickers. All right, first one, SPX. We have been a bit bearish, but let's take a look at where we are right now. So there's notable trend line since the pandemic. From here, pandemic low to the bounce of November to the flash pullback of January. This has formed a trend line, and now we are right on it. Okay, so whenever you're trading in a uncertain market, know your bull and bear thesis. Have both ready and know the breaking point of both of them. Obviously, the breaking point of both theses should have been a while back, depending on how you look at it. You know, if you go into closer time frames, breaking point of both theses would have been either this, the breakout fake out back here, or the breakout fake out on, or was it Thursday, when we broke out and came right back down. That was the breaking point. Now, if you are still in bull positions, this trend line is your last must hold, because from there, if we were to lose this pandemic trend line, this one all the way from back at pandemic, we've had 3 bounces so far. If we were to lose this, my thesis for the bear is we will be looking at back testing of this 2003. Let's go on the weekly. This trend line that's been guiding us since 2009. You can see clear rejections, another rejection, and then a rejection before pandemic, and we finally broke over it. There were wicks back here, but still resistance. Finally broke over it, still have not back tested. So if the current pandemic low trend line were to be lost, we'd be looking at a back test of this 2009 trend line, which lines up with previous high key support resistance, as well as the 0.3 fibs. So that would be an ideal entry for bull plays. On the bull thesis, ultimately, this is still just about losing it. Weekly bull flag, but now, from what I've seen, weekly bull flags generally don't pull back this fast. Now you can see the last weekly bull flag that we had, it sort of went sideways. One close one close under, and then bounced straight from the pandemic trend line. Now, we are seeing a pullback instead of sideways action. So this is a little bit more negating, especially losing that weekly 8. The trend is obviously in the bear's favor. So coming Monday, we're gonna have to see a bounce from this trend line for bulls, or the bull thesis, my bull thesis, would be broken. Okay. From here, again, looking at the 0.382 from this whole move, which lines up with a 2009 trend line, which lines up with a key zone. And the descending megaphone is still in play, so we will be keeping that. And the channel no longer in play, but let's see how it reacts on the way back to retest this channel trend lines, these two. Might be easier if I draw different colors so that it's easier to see, but look into that. Anyway, so that's SPX. NAS, already bearish at the 0.382, bouncing from there at the this trend line, I believe it goes back further. Yeah, this one goes back to the 03. So we are already at the 2003, the upper trend line of the 2003, where we can see clear rejections here, and then support. So we're back at it. Trend is a little bit more bearish. Huge bull volume came in, unable to push it up on Friday. Then from here, if we're to lose this trend line, I'd be looking down at the GP of this whole move. As for US 10-year over 2-year, again, there is a concern of how fast we've ran on this last leg up. 253 bars, actually less than that. Let's zoom in and get it right here. There we go. 249 bars for 1123% versus the last time that we ran. And let's get this on 0.2. That's a lot of green candles in here, eh? Alright, so the last time we ran 1285% in 1152 trading days versus 249, only a quarter, less than a quarter of a time. So a little bit concerning. We pull back to the key zone, then we bounce from there. So keep an eye on this. However, US dollars is where we are seeing the reflection of market pullback. We stalled down here in the key zone. Never really broke down, closed down under 1 day, but then got bought up the next day. And now we are seeing big bull reaction. A lack of follow through on this head and shoulders pattern. Did not see, we broke the neckline, did not see too much of a follow through. That is a little bit of a red flag. Excuse me. Yeah, so that is a little bit of a red flag. From here, big bull action. Would anticipate something along the line of a inverse head and shoulder now. Okay, I need to put this somewhere closer. There we go. Potential for a inverse head and shoulder playing out. Let's see the reaction at the neckline. We're gonna have to form a descending neckline. So from here, we want to see a pullback to form that right shoulder. If we do form, start seeing a pullback, we're likely to see the market bounce, which makes sense given where the market is at right now. Okay, but if it is the right shoulder on the US dollar, the bounce should not be significant. So overall, market is in an uncertain area right now. Be aware of your trades. Know where your account is at. Sometimes no trade is a good trade. Cash is a good position, especially if you're in US dollars. Your cash position should have seen an increase lately. Okay, so that is the market. If you haven't seen the video from Thursday, make sure to check it out. Thursday, I did a market deep dive, spent 30 minutes on it. And that's why I'm not doing it too much today, because nothing has really changed from the thesis that we went over on Thursday. Make sure you check it out. It's called Market Deep Dive on Thursday. All right, and let's get into the hottest tickers. First one, Bitcoin. Still pulling back, but seeing a little bit of a base through this previous resistance support area. Seeing a little bit of a base around there. No bull volume. Again, this is a long-term weekly or daily, long-term daily or weekly bear divergence. So anticipation is this would take a long time for it to play out. So let's see what next week brings. Anticipation, if not further pullback, would be looking for an inside bar. And next on the hottest ticker, and do Tesla. Seeing a bounce from this trend line that is on the weekly, but on the daily, we are pulling back again right into that GP. Seeing a bounce from the GP. Relatively, Tesla is relatively strong versus the market. Cathie Wood's been buying it. Potentially that's why. But in the relative strength wise, you can see we are only at the GP of the last move versus the market. We're already at new lows. Same with NAS. We're already at new lows. So Tesla is relatively strong. Slight increasing bear volume. Anticipation is we will hold this key zone as Cathie has been buying. So in Cathie we trust. Upon the bounce of the market, where we'd be looking at is at the very minimal, I would anticipate a 0.5 bounce, which brings us to the 750 zone. Also brings us to the lower part of this previous resistance support zone. And now looking at it, depending on how long it takes, it could also line up with the upper trend line of the previous channel. Okay, next is S2 PLTR. I believe Cathie's still buying it. So we made new lows. Nothing too notable on the bear volume. Do remember these two bull volumes back to back were the highest bull volume ever. So this trade is still intact. We are seeing lower wicks forming. Understand that, let's see, where is the must hold? I'm seeing a previous support here. So let's see how this works out. But ideally we don't want to see a close under that 23.37. Chart is relatively weak, but there's a chance given the volume that's came in before. Next is FSR. Congrats, FSR bulls. Congrats. Look at this bull volume that came in into new all-time highs. Hey, 1-to-1 extension target has been reached, and we are seeing a slight rejection from there. Extension target from this low to this high to the higher low. 1-to-1 extension target. We are there. From here, we are a little bit extended from the daily. Based on the volume, we should see further follow through. Let's see what Monday brings. Next, QS. We're now trading under the daily 8 on QS. Slightly decreasing bear volume, so still not too concerning. Key to hold is this 51.73. We can see previous support. Well, broke down under, got bought up right away. Support, resistance, multiple resistances, and then support again. So 51.73 is key to hold. Last but not least, I believe Zoom is relatively strong as well. Yeah, Zoom is relatively strong. We held that pullback slow on Wednesday, 23rd, Tuesday. And then from there, we are seeing a bounce. This is actually a very nice price to hold. Okay, so we're gonna be right there. Yeah, so it's a nice price that we held. We can see previous resistance 2 times, then support, and now it's acting as support again. 385, key price to hold. All right, that's it for today's market as well as hottest ticker review. Gonna keep this one short before we get into the weekend hottest or ticker reviews, the really long videos. So hope you guys enjoy the content. Don't forget to give it a thumbs up if you're looking to build that pot of gold and enjoy the content of this video or the channel that we provide. Please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trial to our chatting platform where trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you guys in the next video.